That's right, folks. I hope you are nearly as excited as I am, because I'm quite excited here, folks. That's because this is the biggest week in earnings season. You know it is. So many great companies, as you can see on your screen here. We're going to be talking about them today, seeing which ones are worth taking a look at. I hope you're excited. This is definitely a pivotal moment for the stock market for the next, really for the next few months. This week right here really could be. Depending on what these earnings look like, if they're negative, we could see a even worse time in the market than we have been, right? But if we see some positive numbers out of this quarter and potentially some good guidance, things could be heading in the right direction. But unfortunately, if not, we could see a lot of negativity in the market overall. Could be bad if some of these big companies post, not even if they beat this quarter, but if they show outlook being a lot lesser than expected, we could see a bad time in the market, folks. So let's get right into it. A lot of companies to cover. Starting before open with, that's right, Coca-Cola. Coca-Cola is an exciting one for several reasons. One big thing is I expect this company to post a near double-digit growth in revenue, and that's solely for the reason of the restaurant business. I've seen really good data from restaurants and experiences businesses that are looking fantastic for this quarter. The demand it's been pent up, and people are finally going out and enjoying things. And with that, obviously, with restaurant spending, a lot of restaurants, that's right, Coca-Cola is what they serve. And this is actually a massive portion of the business. If you don't know, the restaurant segment makes actually a pretty decent amount of revenue for Coca-Cola, and they've been missing out on that over the last couple of years. So that's why you're going to see the revenue by around double digits, which is not typical for Coca-Cola, but it's really just a recovery amount. But still, I'm excited to see it and what they're able to do. Activision Blizzard follows them. It's been an incredibly tough couple of years in terms of video games. Not tough in the fact that they haven't been doing well, but tough now because now they're facing incredibly tough comparables, okay? It's going to be very tough to grow at these levels because people have been spending so much on games over the last couple of years, software and firmware, obviously, all these things, okay? People have been buying the heck out of video games, and Activision Blizzard's been a big beneficiary of that, right? They've been making great numbers, and pretty exciting for them. The main talk here is going to be on what the status of the Microsoft transaction is going to look like for them, so keep that in mind. But nothing crazy overall with Activision Blizzard. It's just going to be tough comparables. It really is. Otis after them, Philips. Great appliances from Philips. We got a couple more of those too. Dorman, we still have some financials here. You see Bank of Hawaii, Bank of Marin, HPT Financial, and Community Bank. We've seen actually really good numbers from these banks so far. Pretty good earnings, over the last couple weeks from these financial institutions. So see if that can continue for sure. Then after close Monday, we have another one similar with Philips here. Whirlpool. Obviously, an appliance company, somewhat difficult in the current environment, in the inflationary environment. A company like Whirlpool doesn't necessarily do as well. People aren't doing the home upgrades that they were prior, right? When they had a lot of excess money. They don't now. The walls are tightening a little bit. Whirlpool going to see a tougher time over the next couple quarters at least. So keep that into consideration when you look at Whirlpool. PCA, Zions Bank Corp, that's right, more Brown & Brown Insurance, Crane, Ameriprise Financial, Cadence, Calix, Hexcel, and Berkeley, rounding out Monday after close. Here we go Tuesday before open with UPS. Again, I mentioned tough comparables because UPS is certainly going to be on there. We're talking about unprecedented amounts of online shopping over the last 2 years, and people are really working on returning to stores. You're seeing traffic go up significantly, and less shopping online. We're still seeing growth, but it's obviously lessened quite a massive amount. So we'll see what UPS is able to do with slowing growth rates, but that's okay. They're still way above, 2019 levels by a long shot, so keep that in consideration. Then GE, I don't know, not much to say about GE. Still don't like the company, still working on transitioning. But nothing significant out of the company. I don't really enjoy GE all that much, just being honest with you. PepsiCo going to fall somewhat in line with Coca-Cola, but you have to consider they also have the Frito-Lay business, which I like going into recessionary type environments. This benefits them a lot. As you might see, restaurants take a bit of a hit, which impacts Coca-Cola. PepsiCo has a bit of a hedge against that with the acquisition of Frito-Lay. People are always going to be buying snack foods no matter what the time is. In fact, they buy worse foods for you depending on economic times. People typically, in bad economic times, buy unhealthy snack foods. They buy a lot of them. So PepsiCo is a beneficiary there. 3M following them. Nothing crazy with 3M. I mean, they're the basic. Valero, love oil, dude, love it. Oil prices going bonkers. Raytheon Technologies, great company. Not necessarily for the environment right now, but a great company. Do love them. JetBlue is going to be the first of our airliners, and this is what I'm talking about when we talk about experiences doing incredibly well. I feel really positive about the outlook on these companies, right? JetBlue, I feel really good about the outlook they're able to post. This quarter, maybe not as much. We've seen more of the reaction here in April of all of this pent-up demand. We're seeing a lot of traffic because of that. Now, outlook seems more important than what I would expect the results are from this quarter, because this earnings will only encompass through March. It won't encompass April. I don't necessarily see it being the biggest recovery quarter, but I do think the outlook is what matters here with JetBlue. And I could see this stock really popping. I'll just be honest with you. I could see this one popping. Waste Management following them, Boring, right? DR, Horton, and ADM. After close, we have Microsoft, the first of the focus stocks today, and of course it is. Microsoft has been a consistent winner. They just have. Expected a $2.18 line for an EPS, which compares to $2.03 the year prior. They're still able to grow margins, which I like quite a bit, and increase that net income line, which is something I really like if they're able to hit this. And I think they will. I mean, we're seeing good aspects, and this is not necessarily a business that hurts. Given inflation, it really doesn't. The services will stay obviously similar pricing. The only issue is with wage inflation. That is where they typically see changes in pricing. But overall, I feel pretty good about this line here for them. Now, the revenue line expected to grow quite significantly, $49 billion versus a $41.7 of a year ago in this quarter. That's pretty significant, $8 billion of growth there. Fine. $7.3 billion. Let's not get too ahead of ourselves, but Seeking Alpha never puts anything in there, so I had to type that one in again for you. That's right. I do inspect element. I do it all, folks. I'm coding this whole page for you, Yahoo Finance. Get out of here. But that's a significant growth there, right? We're talking about a growth rate that's darn close to 20%, right around 18%. Which is what they're expected to do for the full year. So I'm excited to see that. I think they hit on this line. I really do. And again, I think guidance is one of the most important parts here for them. Alphabet is also a massive, massive earnings. You may know them as Google, but the focus here is going to be on ads. And again, I think given inflationary environments, there's always a look at ads because maybe companies will be spending less on advertisements to kind of save the money, right? Because they don't have as much money to spend. We'll see what that looks like. Again, I'm not necessarily a buyer in that, but outlook I think is the most important. But I like what they're able to do. I think they'll post a really nice quarter here, and I think the guidance will be plenty fine for Alphabet. Now, this is one that could certainly fall massively. Let's just be clear with each other. If they don't hit and the guidance isn't looking good, this is a stock that's going to be declining 10+% because it hasn't been nearly as impacted as a lot of the other stocks out there in this market. So they've been outperforming pretty well. So keep that in mind. Visa, I expect good numbers out of Visa. We've seen great numbers out of the other financials so far. I really do expect good numbers out of Visa. Then following them, GM. Um, hmm, I don't expect good numbers out of GM, if I'm being honest. It's a rough quarter when you look at these auto manufacturers because we had factories shutting down. We had just low demand due to inflation. It's not a great quarter, I wouldn't expect for auto companies, in my opinion. Just being honest. Enphase following them. Chipotle, Mexican Grill, doing great things, and I think you will see some pent-up demand here, even for Chipotle, and these restaurant stocks are going to do quite well in the coming future. In my opinion, I think you'll see some good numbers out of these guys. Texas Instruments, good company for sure. Quantum Scope, Skechers, and Range Resources. Wednesday before open, we have Boeing. A lot goes into Boeing, obviously, more than just the airline numbers there, but some good things with Boeing. I think that they should post pretty good numbers, and the outlook should be more exciting for a lot of people. That's my thought on the matter. But I think Boeing could do some good things this quarter, and really into the guidance perspective is what I'm more focused on for them. Spotify following them. This is also one that is. Look, this one. If you're buying options, if you play options contract for earnings, Spotify's one to play. Now, what do you do whether you buy puts or call options? I can't tell you. My heart tells me puts. I think this stock goes down after earnings, mostly on a guidance concern. I really do believe that there will be a guidance concern with Spotify. It's a great service. They're doing great things. But I do think that'll be a concern for me. And I would love to be wrong. But that's just my hunch. And I hope I'm wrong there. I do. But this thing's going to pop either way on these earnings. It's going to go up 5+% guaranteed, or down 5+%, no doubt. Cenovus after them. T-Mobile, first of the telecoms reporting for this earnings cycle. So that's exciting to look at to see kind of where the other ones might fall. Oshkosh Bagash, oh yeah, that's right. Tech Humana, Harley Davidson. People, look, motorcycles, not a very recessionary friendly vehicle. They're not. American Tower, and then ADP. ADP, a lot of companies using ADP. Worth looking at, though. After close Wednesday, though, we're starting off hot with Meta. Otherwise known as Facebook, if you might know them. This has been a stock that's been obliterated since last earnings. And look, it still has a lot of room to go down if these earnings don't go well. And I've heard a lot of bad juju about these earnings, right? Expected to only have a $2.56 line of EPS versus $3.03 or 30 cents of a year ago. Expected to decline EPS on a full year basis. Concerning. Now, from a revenue standpoint, they are expected to grow right around 20%, 19.3, at $28.2 billion compared to 23.6. That is a very good line. If they're able to hit that, then you'll see good things out of the stock. But guidance is again going to be the concern. We've had here from Cleveland Research here said that this is going to be a disastrous quarter for Facebook. Expect terrible numbers, not near the analyst expectations. I don't know about that, but look, I don't buy Cleveland Research. I don't buy them on that report. I think this will be a good quarter. Guidance is going to be my concern as we look at what ad rates look like. But I think this is I like this company, and if it goes down, I will be buying the crap out of it, folks. I am going to buy the heck out of this company. If it shoots down another 5 to 10%, it's stealing candy from a baby. It really is. Then we have PayPal, great company too. Digital currency, it's doing well, but the stock not doing necessarily as great. Ford, I do want to look at this one. Expected a decline. I believe the analysts are expecting a decline in revenue this quarter too, which I get. It's going to be a tough quarter for them, but again, once they get this electrification kind of figured out, I like Ford a lot more as far as a stock, but they've been getting destroyed as of late. Just destroyed. Qualcomm following them. This will be relevant to a future earnings here with Apple, how they do, because obviously they get a lot of revenue from Apple with their chip. But Qualcomm's a really good company, doing really good things. So Pinterest, I'll lump in kind of with Meta there. It's going to be similar numbers. Obviously, Meta's a little bit more well-diverse than Pinterest, but hard to say. Snap posted some less than ideal earnings last week, so there are concerns there for these companies, but I feel good about Meta. I do. Teladoc Health, this is one that's used a lot. Look, I think there was a lot of demand for this back when we couldn't go to hospitals, but this is a service that unfortunately is going to see a lot of negativity now, and you're going to see a lot more in-person visits. Teladoc was good for a little bit, but sometimes you'll get a physician that doesn't know what they're doing. Look, there's a lot of negatives with the service, and I understand the feasibility of it long term, but there's a lot of pent-up demand, and they had to. They couldn't go to hospitals, but now that they can, people are probably going to prefer to go to hospitals and get better treatment that way. There's only so much that a doctor can do over the phone. It's just the case, unfortunately. So, ServiceNow, Las Vegas Sands. Oh, I expect good things out of this. People are gambling. Something about a gambling man. He called the Rising Sun. Hertz after them, and then O'Reilly Auto Parts. Thursday before open, we have Twitter. A lot of drama with Twitter, but again, I think more of the focus here is obviously it's going to be the numbers. We all know the drama of Twitter and how that's been impacting the stock. That's not going to impact their earnings day. What matters here is going to be the numbers. Users and obviously what the ad rates look like, right? That's what matters for this. I don't expect good numbers out of Twitter. Just being honest, I don't like it. I really don't like the company right now. I don't. Even Jack Dorsey's calling it out right now. I mean, just being honest with you. And Jack Dorsey, not the most savory guy out there. Caterpillar after them, then Nokia. Don't know how Nokia's still around, but they are, folks. Southwest, lumping it in with, that's right, JetBlue. Similar earnings. I'm expecting good guidance, folks. I really am. MasterCard, lumping it in with Visa. Look, if you see Visa posting good numbers, MasterCard's going to post good numbers too. McDonald's, what do you expect out of McDonald's? It's hard to say. I expect good things. Look, they got to open up the in-person dining for some of these places, and it will help them quite a bit. Some locations are, some aren't still somehow, so that could be beneficial. We'll see what that looks like for McDonald's. It's a dominant company long term, though. It really is. Merck, then Peabody, Eli Lilly, and Domino's Pizza, which I got a big announcement about Domino's Pizza, folks, that you will see in my next. That's right, start of the month. We're going to be doing a portfolio review. That's right. Hope you're excited. Domino's Pizza. I expect good earnings here. I love a nice Domino's Pizza. After close Thursday, though, we have, oh my gosh, it's smacker after smacker. Apple. Starting off first, not expected to grow the EPS line really at all. $1.43 versus $1.40 of a year prior. I think it'll be close. Obviously, we're going to see margins tighten a little bit as we get into a cost of goods increasing. Cost of goods sold will increase. There'll be an impact there, right? Revenue expected to grow right around $4.5 billion. $94 billion expected off of 89.5 a year prior. Not bad. I mean, it's not significant though. We're talking about 6% growth, or I guess 5% actually. Nothing really crazy with that. I mean, 5% growth isn't going to make or break anything. I care about the guidance, folks. I really do. We'll see what it looks like next quarter. But again, I think this one will be a beat. Not a massive beat, though. I don't trust these companies to post billion-dollar beats anymore in this environment. I could see around a $94.5 billion line in revenue, but we'll see. I expect a lot of out of Apple, though. The demand, I think, is still high for iPhone. I think their services are doing really well as well. So I'll be focusing on that. Then Amazon after them. Amazon's another focus stock. That's right. Expected a massive shrink in this net income line. $15.79 a year ago. EPS expected only $8.13. And on the year expected to decline EPS massively as margins tighten. And you can see it there, right? That concerns me for Amazon. It could be pretty bad for the stock. It really could. From a revenue perspective, expected to grow right around 11%, 116.29 compared to $104 billion. Now, it's hard to grow by double digits when you're talking about a company that's over $100 billion. It really is. But unfortunately, when you get to less than double-digit growth, people don't like your stock trading at a high multiple again, despite it growing by several billions of dollars more than some of these companies that are growing 100+% in revenue. They're growing by a much larger dollar amount. Investors are clueless about math. They're clueless about percentages. They have no clue what anything is. But I like Amazon this quarter. I do. I really do. Roku. There's concern with Roku, right? These high PE ratio stocks, this is going to be one that also has a very volatile earnings if you're interested in options plays. Don't know what to say on Roku. But again, as I've mentioned, I think people will consolidate streaming services over time. But we'll see what that looks like. Intel after them, I always like looking at Intel earnings, even though this company's been garbage for me. I still like looking at the earnings. Robinhood following them. Nothing crazy to report on Robinhood. We've seen actually from the financials some pretty good data that they've actually posted this quarter from an investment standpoint. We'll see if that stands true with Robinhood. United States Steel, U.S. Steel, Gilead Sciences, Atlassian. A lot of people own that company. Great stuff out of that company. Southwestern Energy and KLA. Then after close, or before open Friday, I should say, we have a couple of oil companies here with ExxonMobil and Chevron. Curious to see what those numbers look like for them. Should be pretty darn good, in my opinion. I mean, you'd think so. I don't know. It seems like they're doing pretty well given ridiculous gas prices. Then we have Colgate Palmolive, the most boring company that's ever existed in the history of anything. AbbVie. Love AbbVie. I really do. Love the drug pipeline's really good. Another one, Bristol Myers Squibb and AstraZeneca then. Oh, baby. Phillips 66. Look at these companies. All the same, couple industries. Honeywell following them. Wirehouse. And then Charter. Charter should not exist. They provide the worst service ever. That's what I got for you, and hope you have a great stinking day.